Well, welcome back to Finance Uncut. On today's episode, China's economic collapse. China's Evergrande has defaulted on its debt, Fitch says. Let's cut to a clip and see what this all means.
Cruddy there mentioning China. Let's discuss that with Damien Sassar, our Chief Emerging Markets Credit Strategist at Bloomberg Intelligence. Damien, China, Evergrande, default. We've been waiting for that D word for a while, Damien. It comes and it's just like, okay, what next? What next, Damien?
The news that everyone's been waiting for. So look, yes, restricted default. Fitch placed both Evergrande and Kaizen in restricted default overnight. And look, that's about $30 billion in offshore bonds, which are now subject to cross defaults. And so we're going to see how it all shakes loose. For me, it's going to be, prioritizing creditors. And if you look at our friends at Marathon, Ashmore, UBS, Allianz, BlackRock, all of which own these bonds, they probably have very low expectations on what they're going to get paid back, especially after the 7-member credit risk committee was formed with the Guangdong provincial government, or two entities therein, sitting on the board. They're going to prioritize employees. They're going to prioritize homeowners, suppliers, and offshore creditors are going to be bottom of the stack, and that is the risk. So what is the recovery, Jonathan, on these bonds for offshore creditors? The verdict is still out, but they're trading at 20 cents on the dollar, so that gives you some semblance of where we are.
Well, the bar is pretty low. Basically, people are having pretty low expectations. I do wonder, though, if you take a step back, what this means in terms of how China will handle a restructuring. This is the first really major restructuring at a time when we've kind of cast aside fears of contagion, right? I mean, the government seems to be trying to step in, but there is a larger message for the Chinese credit markets, especially as international investors want to get in, especially with those yields where they are.
Well, I think you got to look at Baosheng Bank, which defaulted. You got to look at H&A, which is the airline conglomerate, which also defaulted. Those are your benchmarks. Those are your litmus tests for how this is going to shake out. And again, what it means is that the government's going to be actively involved. They're going to prioritize stability, Lisa, but they're probably going to bail in offshore creditors when necessary, right? So, at the end of the day, that's what you got to look at. That's going to be sort of, your model for how this is going to proceed. But again, the real estate sector is a different beast altogether. I mean, it accounts for 25% of China's economic output, 75% of household wealth. So, the verdict is out again.
Hold on a second, Damien. I just want you to clarify. You said bail in overseas investors. Elaborate. What do you think that the government's going to do?
They're going to treat them as, they still need access to offshore credit markets, offshore capital. So they're going to, treat offshore creditors as sort of like a bastard stepchild and then bring them in when necessary, right? I mean, let's take a look at the underlying holdings between Kaizen and Evergrande. I mean, Kaizen is focused on urban redevelopment projects. The market thinks that its properties are worth so much more and they're so much more liquid than Evergrande, which is basically owns theme parks in the middle of nowhere. They own in tier 3 cities, and, so their property valuations are probably a lot less liquid and certainly a lot lower than Kaizen. So, we're going to see a lot. And by the way, we're also going to see the keep well provision. Remember, these property developers have issued their bonds via some offshore entity, and there's a gentleman's handshake between the operating company and the holding company offshore as to whether or not they're going to even pay back those creditors. That has yet to be tested in the China legal system. We're going to see some evidence of that as well.
Now, they had this forbearance they were asking for bondholders. Then we got another one, I think it's China Yuan. And let's not forget serial defaulter Sunshine 100, which we're hearing very little about currently. But
they're down the list of the pecking order and the priorities right now. Kaizen, of course, was the first property developers to default back in 2015, I believe it was. Looks like they're on the verge of defaulting again. They had a $400 million bond mature. Was it yesterday, Tuesday, Monday, I believe it was. They have halted shares right now trading. They failed last week to win approval for a debt swap to perhaps extend the payment deadlines. A group of creditors also yesterday or Monday sending Kaizen a formal forbearance proposal. Monday, maybe buy some time as well to find a way out. But again, a lot of these developers, the second, third-tier developers, also based in Guangdong, similar liquidity problems as Evergrande. Not the big, pile of debt, but still under pressure. And Aoyuan is another one.
So this article from Zerohedge, Evergrande has finally defaulted. Here's what happened next. I'll put a link in the description of this. We're not going to go through the whole thing, but I just want to touch on the summary or the conclusion to this. The bottom line, however, was summarized best by China Beige Book. While direct fallout from the Evergrande bankruptcy, which has been telegraphed for months, won't be the problem. The problem is having a billion Chinese watch this play out and expecting them to spend afterward. Now, let me share a thread from my buddy Tarek, and I'll share some commentary and some information on that. And from my buddy Tarek, unlike a Western company, the biggest issues with a company like Evergrande or Kaiser isn't the debt we can see on the balance sheet, it's what we can't see. The stuff that is known can be restructured and investors will take losses. But this unwind will be protracted, and these losses or haircuts have been telegraphed now for months. They are not a shock to anyone paying attention. Some investors may get wiped out entirely, but the greater threat is the risk to the shadow banking system. For example, Evergrande alone has off-balance sheet liabilities of 1 trillion yuan. This brings us to a pertinent history lesson. In 209 BC, Chinese generals Chen Sheng and Wu Guang were running late due to a storm. The punishment for failure was death. Rather than accept the punishment for something beyond their control, they instead led a rebellion against the Qin dynasty out of fear rather than risking their superiors' wrath. This is the problem now with the property sector. Who wants to tell Xi about their losses? After all the warnings, all the speeches and rhetoric, who wants to tell the CCP leadership that they can't make good on their shadow banking liabilities until they absolutely have to? This is a major risk that defaults could spread without it being widely known by government. With practically no one fully understanding the truth, breadth, and interconnectivity of the Chinese shadow banking sector and the more formal financial system, it's possible issues could brew below the surface for a protracted period before bubbling to the surface. In short, the desire to appear like a model citizen in the eyes of the CCP and avoid the wrath of Xi could lead to risks being understated and underestimated within the property sector. After all, they aren't supposed to be doing a lot of this stuff anyway. And what have they been doing? Well, they've been doing for years and years and years some crazy Enron-style financing. There's been reports from a lot of people I listen to that are experts in China and on China of pre-sales scams. And even some dodgy dealings, let's say, to people in power and decision makers around both pre-sale scams, but also the fact that these companies have actually been insolvent for years. And so to delay the inevitable, they've also done some dodgy dealings under the table, which, you guys can work out. But one of the best books, the best ways that I started to understand this property bubble and this debt bubble in Beijing, or in China, sorry, and to understand the whole shadow banking system in China, is this book. I want to highly recommend Denny McMahon's book, China's Great Wall of Debt, Shadow Banks, Ghost Cities, Massive Loans, and the End of the Chinese Miracle. It's a really good book. Denny lived in China for many years. He speaks Mandarin, and this book is really well researched about China's shadow banks, or non-bank sector, if you will, and also the scams that happen in China. And speaking of scams, there's a big scam happening to American investors right now, or international investors, I should say, but in particular in the US. And the US authorities are not aren't really doing anything about it, in my opinion. But Kyle Bass has been talking about it a lot. And in breaking news, China says housing is for living, not for speculation, the Chinese state media said. And this isn't the first time that Beijing has said that housing is for living and not for speculation. The finance minister said it only a couple of months ago. Xi Jinping said it earlier this year, but the first time I heard Xi Jinping say it was back in 2017. So here in the South China Morning Post, published on the 12th of November 2017, Xi Jinping says houses are for living in, not for speculation. And also from the Chinese state media, China economy faces shrinking demand, supply shock, and weakening expectations. And here's the thing, if Beijing is trying to crack down on the speculative investment in property in China and this debt bubble, and you'll see a chart, I'll show you a chart in a second, which will absolutely blow your mind. It blew my mind when I first saw it. Remember this, that 25% of China's economic output is from the property market, the construction of the property market. And 75% of all household wealth in China is linked to the property market. So if they're trying to deflate the debt bubble in China, if they're trying to reduce the speculative nature of investing in property, and the Chinese economy is going to suffer. And remember, China has used its property sector as a growth engine. It is incredible to think this market is 2 times the size of the US property market and 4 times larger than China's annual income. And 20% of homes are empty. So Xi Jinping is right in a sense that it is a speculative property bubble that has been built in China, but they've done it on purpose. They've done this thing, so they got no one else to blame but themselves. And I believe their property bubble is going to burst. And you can't just deflate a debt bubble like this and get away scot-free. And unfortunately, this is going to have some consequences for Australia. And from my buddy Adam, China Evergrande has just officially entered default for the first time after its failure to make 2 bond payments on $20 billion of dollar-denominated debt, which were already in a grace period. Mainstream isn't paying attention anymore, but the ripple effects via Evergrande are still amplifying. And no, this is not the Lehman-type contagion that we're going to see. What these ripple effects are going to be is what I've been talking about. You know, when you've got 25% of economic output in the housing construction sector, when you've got 75% of household wealth linked to property, and you think you can just deflate this debt bubble without any consequences, you are kidding me. And I am going to, and the whole problem with central planning, remember Soviet Russia, and many mainstream economists, even right up into the 1980s, said, look, Russia has made socialism work. And they thought they could prove the Austrian economist and Ludwig von Mises wrong. But I'm going to stick with Ludwig von Mises. And he wrote the book, The Economic Calculation in the, the Economic Calculation in the Socialist Commonwealth. I've got the book just behind me. And I believe that China is going to fail just like every other socialist central planning economy. And unfortunately, the move across the West, we seem to be moving into this direction, which is kind of scary. And speaking of Ludwig von Mises, his book, Economic Calculation in the Socialist Commonwealth, you can actually download a free copy here from the Mises Institute. So I'll put a link in the description below if you want to read this book. It's a short book. It's an easy read, probably one of Mises's easiest readable books, because he writes quite heavy. That's why probably I'm more of a Murray Rothbard fan, but I'll put a link in the description. You can download this free PDF and have an e-version copy of this book. All right, so this is a chart that I said I would share, which would blow your mind. When I first looked at this, I was like, this is insane. But this is total private credit. And you can see all the different countries around the world there, total private credit. And then you see China's. And, it was growing at a fast pace prior to the GFC. But when the GFC hit, wow, they went pedal to the metal. And as of 2020, China's debt build exceeds 2,900% from the 2000 baseline. And you can compare that to all these other countries. Compare it to the US, compare it to others. And no country has survived a credit build this large or this fast ever in history. And this is just another reason why I am bearish China. I don't believe socialism can work, and reading Mises convinced me that that is absolutely impossible. Even today with artificial intelligence and where these elitists want to take us with AI and transhumanism and all this sort of stuff, where they think that they can allocate resources efficiently and better than the market. And, I don't believe that is the case. Now, the other big reason why I'm bearish China is their demographics. Okay, so one, they've got a huge debt bubble, which is just not good. Good luck to that Keynesian type, spending, consumer spending in the economy once that does pop. The whole Keynesian model of government intervention, government spending. Look, this whole wealth effect, as asset prices rise, we feel richer, so we'll borrow more, spend more. It's a Ponzi scheme. It cannot go forever, and I think with China in particular, we're probably seeing the beginning of the end of that. But China's demographics, they peaked in 2011. They go down forever. Okay. When I look at China, I see Japan 1980s. Japan, everyone, they were buying a lot of property on the Gold Coast, just down the road from where I live. And everybody was saying that Japan was going to take over the US to be the next global superpower and this economic giant and whatnot. And they aged, and their bubble popped, and we're going to see China's bubble pop. And China is aging, and due to their demographics, they've got big problems. They got huge problems. So, I'm just bearish China. I am one of the bears out there on China, and there's so many who are bulls on China. But to be honest, it's the exact same thing in the 1980s with Japan. Everyone was bullish on Japan. There was only a handful of people who were bearish. So ultimately, I think Evergrande, all of this is going to collapse the Chinese economy. And, they built it up themselves. It's their problem. They got no one to blame but themselves. Central planning don't work. Socialism don't work. Communism don't work. It will fail. Always fails. It's got a very successful track record at failing. And when their economy fails, it's going to have huge impacts on us. We have leveraged so much off the growth of the Chinese economy with their commodity. Their hunger and desire for commodities has been a boon for Australia and Australia exporters. We'll see what the electrification of the economy, this green revolution, whether that demand can outstrip the demand that has come from China over the last, let's say, decade and a half to 2 decades. That'll be quite interesting. But I did do this video a couple of months ago. I've done a few videos on China and Evergrande now. And I do highly recommend, if you haven't watched it, go back and watch it. It was, I really gave a lot of detail as to why I see things imploding and the impacts that they're going to have on the rest of the world. And a lot of people think that China imploding is going to be deflationary for the rest of us. I think the opposite. we've had disinflation because of China, because we've outsourced to China. Okay, now we've put so much of our supply chains and our production, basically, we've sent it over to China. So the stuff that we need is coming out of China. Now, just one example, AdBlue is a product that predominantly comes from China. And apparently we've got about 6 weeks left of it. And that goes into all diesel vehicles. So trucks, cars, diesel cars on the road. I've got a diesel. I drive a diesel. And my car might be on the side of the road in 6 weeks' time. If trucks are off the road, how's food going to get across? How's other shit? Like, this is going to be so inflationary. So inflationary. Other things, if, you know, China aren't making things like they used to, if they're not, you know, they don't have that construction boom in China, you know, if we start making stuff onshore because of these issues, that's inflationary. If offshoring to China was disinflationary, then onshoring has to be inflationary. And that's according to, you know, everybody else's expert analysis. So I'm still on the inflation camp. I did say that I see 1973, 74 type asset price crash while we have CPI rising. And that is still my base case. And that is still why I'm also investing in assets that simultaneously have no counterparty risk, i.e. gold and silver, the physical. Yes, I speculate in the gold, silver miners, gold, silver explorers. It's why I have investments in farmland, because food is probably going to become an issue in the near future. So to have investments that actually produce things that people need and produce income from that is real assets, and assets that don't have the counterparty risk. Because we're moving into a very unsustainable world. This fiat monetary system that we currently operating in is coming to an end. It is so clear to me with that, and that's why one of these elites are trying to push for some new type of reset, a monetary reset. And I'll do a video on that, on what all the different options are available to the elites, what they should do versus what I think they will do. And so I'll do a video in the future about that. But anyway, guys, what do you guys think? Do you think Evergrande and Kaiser are going to have a impact on the Chinese economy? Do you think it's going to collapse the Chinese economy? Do you think that the Chinese economy collapsing is going to have an impact on the global economy? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. Take care, everyone, and I'll see you again on another episode of Finance Uncut.